Anyways, welcome, Roger. Thanks for joining us. And Roger, tell us where you're joining in from, and maybe give us a little intro here before you get going.
Yeah, thanks a lot, Greg. It was a pleasure meeting you. I think it's been over a decade, quite frankly. We probably met almost in the early teens, somewhere
Yeah.
between 13, 14, 15 down there. Um, we've been in this space since 2008 as a bank. First Western Federal Savings, we're a lender in this space, but we've also been hip to the idea of self-directed IRAs for about 40 years. The president of the bank opened his self-directed IRA in 1986. And so he had one for a long, long time and knew all about that. And then just a little background about our bank. Jeff was looking for a loan to buy another property. This is maybe '05, '06. And he looked around. There was only one lender out there in the whole U.S. that would actually make a non-recourse loan to an IRA. And he's like, wow, one? Really? That's all there is? Maybe there's room for two. And so, 2008, we entered the market in a big way. And I educated myself in the bank, and then at that point in time, made contact with basically all the custodians in this whole space and let them know that First Western Federal Savings was in it to win it. We're here for investors in this space. And a little background on us, why that fits, is we've always been a portfolio lender. We're a boutique lender, like Greg and Horizon Trust is a boutique player in this space. We're an independent bank, we're small, we're effective, we're efficient, and we can move quickly and do things because we're not this big cumbersome entity. There's 8 people that work here, and we make this whole bank fly on 8 people, which is pretty remarkable. You don't see many banks like that today. So I feel like our company synergy with Horizon is really good because what differentiates ourselves, same thing, service. Other non-recourse lenders can offer a product, but how do you educate and tell people about it and make them comfortable with it? Because unless they have comfort in what they're going to do in this space, they're not going to make a move. And so, largely, what I do is a lot of what you folks do. I educate, help people to understand the ins and outs so that when they finally are ready to pull the trigger on something, they have confidence and they know what they're going to do. So, um, that's a little bit about us as a bank. We've been an independent bank forever. And then we got into the self-directed space in '08. And I've been running this department since then and have been an independent banker since, oh man, the late '80s. I've been in the banking world all my life. And so I really enjoy it, but I really working for this small company and touching with investors because it's an exciting field. It is, to me, it's the most exciting banking job I've ever had. And the most exciting is I'm dealing with one-on-one with people all over. And this is their lives. This is their investment. Super important stuff to them. So I really have fun every day talking to people, helping them out, making sure they know what they're doing. And then when they're comfortable, hey, we'll have a business relationship and hopefully we move forward. So that's a little bit about us. Now, I think what I'll do is I'll open up my slideshow if you'll let me share my screen. And
Is that letting you
it
share or no?
should come up here just a moment,
Okay.
guys.
And we will, by the way, I did see that we will his Roger's information you'll see throughout. We're going to give you his information. So don't worry about that. We'll
Can you
definitely get
see
it.
my screen now? You should be up and looking at a screen that has a slide with First Western Federal Savings Bank on it.
I don't see it.
If you can't see it, then um, I've got to share. Hit share. I have my screen set on share with you guys. I don't know why I'm not seeing, or you can't see my slide because I see them off to the sides of my presentation. However, if it's an issue, I can walk through this and talk to you folks.
Uh,
Are we making some progress? I hope.
Click here. Oh, I think so. You looking at?
Yeah, I'm trying to, I think this is covering up my,
Okay, making progress.
Okay, we got a slide here in front of us. It says First Western Federal.
Yeah, maybe put it in view slideshow mode.
I thought I had that way. Um,
Uh,
yeah.
if you go, yeah, right there. We can see that, even though it's
Okay,
not totally, yeah, we can see it. There you go.
let's
Let's just
roll
do
off
that.
of this.
Let's roll that.
This is
It's
good,
great.
and I think
Perfect.
we can make this work for us. So the first thing is, what's a non-recourse loan? Well, the simple thing is what the non means is that the bank has no recourse whatsoever to go back and collect the loan from you personally or from your IRA if there's a default on the loan. And that's the difference, the biggest difference between these kinds of loans and a regular bank loan. You go in to sign a regular bank loan, mortgage, what have you. The bank always wants you to sign for the money, always, right? They're going to pull your credit. They want a financial statement. They want to look at your history as a borrower over your borrowing life, and they want you on the hook. Well, in the IRS regs, when these were all established way back in the beginning, they said the only kind of loan that an IRA or self-directed retirement plan could get is non-recourse, so that the owner was not liable for any debt. And understand that when you're committing and buying a piece of property, for example, with your IRA, you're not responsible to pay that loan back. Now, your IRA is, and the IRA will make the payments every month, but you personally are not responsible for the loan. The neat thing is these loans don't show up on your credit report. They're not, you wouldn't list these if you went in to see your mortgage broker to buy a rental property or a house. You wouldn't list the fact that you have a loan to your IRA because it's not your loan. So it's like an off balance sheet loan to an entity that you control, your self directed IRA. And it's a way to expand the buying power of your IRA money. Because think about this, if you had $100,000 sitting in your IRA and you're only going to, that's all the money you have, say a rental property is up for sale for 200K, what am I going to do? You can't do anything. We can lend 60% of purchase price. So on a $200,000 property, you put up 80,000 as a down payment. We'll lend the other 120. And bingo, now your IRA owns a $200,000 asset, not a 100. You can make more money typically on a $200,000 rental property than a 100. It's the economies of scale. So the idea is to leverage existing monies that you have in your account, make them go further. So that's essentially what an IRA loan is, non-recourse, and what kinds of entities can qualify. Basically, any kind of a self-directed plan, where it's a self-directed IRA, it's a solo K. You might have a IRA LLC entity, a multi-member LLC, but any kind of self-directed IRA is a qualifying entity to have a non-recourse loan. And what kinds of properties can we finance? Pretty much any basic rental property, whether it's single family, multis, residentials. A lot of people buy 1 to 4 family because that's what they know, and that's an easy entry point in the business. Other people who are more comfortable with commercial buildings, they might buy a commercial. I see a lot of commercial condos because you know what? You can buy a commercial condo for like 250 or 300,000 bucks. They're not that much. I see these people buying a commercial condo and they'll have a little medical office in there. And that medical office will pay them 2,500 bucks a month, triple net lease, so the owner doesn't have any carrying costs. They pay all the expenses and that money just rolls in every month. And it's simple. And commercial properties, as you know, are typically less wear and tear. They have longer leases. So the people who are into the commercial side of things, you know, they can benefit and grow their IRA for that. But you don't even need a big IRA to do some commercial stuff. Because like I say, I do commercial condos all over the country. And those puppies make money. Ag as well, for people who are familiar with ag loans, ag properties. They might, we did one the other day to an orange grove out in Cali, right? Orange Grove's kicking off a lot of money. Guy owns it in a self-directed IRA, wanted to pull money out of that to go buy something else, so we lent money against his orange grove. Kind of neat stuff. Things to think about. The 40% down I mentioned earlier is probably the primary one. Do you have the down payment? Do you have the closing costs? You got to think about the idea of you're buying real estate just like any other transaction. So it's To some degree, it's all the same. You have a down payment, you have a title company, you have closing costs, closing agent, realtors, appraisers. Those all function into the same way a regular personal purchase would work. It's just that you're using a different bucket of money. Um, there's an idea there. The bottom says 15% of loan amount. We don't want you spending that last dime getting into something, and then you got to replace a $2,000 water heater, and Joe the plumber comes over and hands you a bill for that water heater. And you can't pay Joe out of you just can't hand him a debit card or pay him out of a checkbook. You got to pay Joe with your IRA money. So that's the reason to leave some money in there for working capital, cover your properties, times with no rent. Maybe you got to do some carpet and rehab in between tenants. That's what you want to need. Leave some money in there for that idea. Will the property have sufficient cash flow? That's number two on our list. Is it going to throw off positive cash flow? Is the property ready to go in a desirable location, and does it make sense? So basic things that you would look for in any real estate transaction, you're going to look for in this situation as well. How long does it take? About 1 to 2 days for loan approval, close in about 30 days. And we can do pre-quals. We can pre-qualify properties, usually in a couple hours. Let's say one of your clients has their eye on a piece of property and they want to put an offer in at the end of the day. They could submit to me what I call a property eligibility form, just about 10 blanks of information. I look the address up, run the cash flow, do our debt service coverage if it all works, and you've provided me with a copy of your IRA statement. I can write a pre-qual letter in a couple hours. So when you meet
So
with that realtor later on this afternoon, you know, Jane's IRA is pre-qualified for a $100,000 loan for 2346 West Fifth Street. Like that. Greg, go ahead.
I'm gonna, yeah, sorry, Roger. I was just one thought I had as you're talking here is, would you mind those that are listening in the chat? Is there any realtors listening here? Like how many of you are realtors? You or your spouse is a realtor? Would you mind just putting in the chat? Yes. Got any other ones? Yeah. Okay. This is so I at least got 5 or 6 years, probably more than like 30 or 40 of you. Um, this has been something that I've been asked to speak on at different real estate investment groups or masterminds. And I just wanted to stop Roger for 1 second here, because if you're a realtor, as you probably have felt in most cases, the market's changed, right? The last year in sales has definitely changed. And so if every client you have that potentially has an IRA could self-direct their funds and have a relationship like Roger, and now all of a sudden you as the realtor have found probably anywhere from 2 to 5 or 10 more properties that you can go out and be the realtor on and get a commission on outside of your own money. And so this has been a tool that I've seen a lot of realtors take advantage of, going back to their investment pool, talking to their clients, seeing if they have IRAs, coupling them with financing, like with Roger's company. And now all of a sudden they're going out and finding these investment properties and getting more sales. And so I just wanted to bring that up. It just came to mind as you're talking to Roger. Sorry, go ahead.
No, that's an excellent point because a lot of people, I'd say the majority of people who do this as an investor, they already own rentals personally. They already know how to make money in rentals. It's not new to them. It's just that, oh my word, you mean I have another bucket of money I can access to buy real estate? I never knew that. And I think to your point, Greg, that is the biggest thing. And from both the realtor perspective and the investor perspective, you folks as realtors might have been working with investors in your client base for a long time, but you didn't know that. You mean they could take that 300,000 they have over there in their IRA and put that to work and we can buy more property? I didn't know you could do that. And the investor goes, I didn't know I could do that either. So the
Mm,
reality is it opens up and it's unlocking a lot more opportunities both to sell properties because now you have people who didn't think they could buy anymore. And then all of a sudden, my word, I got, 300,000 in that IRA. I could buy a couple pieces of property. So it opens up opportunity that you might not have thought about because, like Greg said, there's only 3 or 4% of people that use IRAs to buy real estate and invest, self-directed. Pretty small. So that's not really on the radar of a lot of people. But you can combine those people with some healthy IRAs and they can purchase a lot of real estate. And I'll get to it in the slideshow just a little later on, a couple points that I think can help people do that. But that's a great point about here's a whole nother bucket of money that either the realtor wasn't aware of or maybe even their clients weren't aware of they could use to invest. Um, Things that can kind of crater a deal or make it look a little bit sideways, or if you over investigate estimate what the rental income is going to be. Most properties that people buy with their IRAs have never been rentals before. Most are owner occupied. And so a seller is living in the house and then they're selling it. And so me as an investor, I'm like, yeah, let me turn this into a rental. And then I go, well, how much is the rent for? Well, it's never been a rental before. Oh, so I got to figure out how much, what's the market rent? And this is one of the biggest hiccups or speed bumps that I see in deals closing or closing without heartburn is overestimating rental income. And it can happen where markets are hot. Oh man, you can't rent anything. And so rent's $2,000 a month. But the check to your work is when we go to appraise the property, we're going to have the property appraiser do what's called a rent comp survey, a rent comparable survey, and find three rentals in the market and find out and establish what's a market rent for this neighborhood, this kind of house. And it might be $1,800 for this particular condo or this single family. If you've projected 2,000 as your rental income and we base the whole underwriting on 2,000 income, 24 grand a year, and then and rent comp comes in at 1,800. Market rent's only 1,800. It's not 2 grand. Okay. So now I'm dealing with say 22,000 a year in income. That could make a difference. So just a word to the wise, don't overestimate what you think you're going to get out of rental incomes and do your research and everything will be good. Sometimes surrounding property values. People will buy some things or look for the nicest home in a neighborhood, and it might be all nice and pretty, but it might be the nicest house in a neighborhood that's not quite so nice. And it's hard to get good appraisals when you're buying the nicest home in a neighborhood. I'd rather have you buy maybe the least expensive home in a better neighborhood because you're not going to have issues with appraisals and rent comps than if you're buying an over improved property in a lesser neighborhood. So just be aware that your surrounding properties are going to determine the value of your property, and that impacts it. High crime areas benefit no one. Um, kind of nothing need to be said there. Poor condition, obviously, poor condition properties aren't going to attract renters, nor will they stay there for very long. So, um, you cover that base before you get into it. If there have other IRA loans out there and there's some dogs in the bunch in terms of properties and they're not throwing off very decent cash flow, it can bring down the overall profitability of the IRA. We look at that. We don't look at, yes, we look at the property you're buying, but we also look at your overall rental portfolio. And we want to make sure that it's solid and it's providing income to the IRA, not costing the IRA money. Last thing, inadequate reserves. That's working capital. You need that for pay the bills. Different improvements have to be made. You got to have working capital. So that's one of those issues that bear in mind, like any good business investment, allow for the unexpected. What do we do? We'll finance, like I said earlier, 1 to 4 family residentials, typically 60% of financing there. And 30 years is what we write on every loan. Just so you know, everything is a 30-year loan. You can pay them off faster than that. You could pay it off as a 15 or 20. But properties don't cash flow very well on 15, 20-year loans. So we find our experiences, the properties will have the best bottom line net cash flow with the longer term loan. And then if you're getting good cash flow and you want to throw extra principal, be my guest. You can do that. We also offer short-term vacation rentals. A lot of people do those as well. We do 50% financing on short-term vacations and other residential 5 units or more apartment buildings. Um, let's see what else. Another one that we do a lot of is cash out refinances. Um, People bought property with cash. Either they didn't want to use leverage or didn't know it existed, where they had the cash, and before COVID and along through COVID, man, there were great deals on properties. And a lot of people bought properties back there in 17, 18, 19, 20, 21 even. Those properties have more than doubled in value. I mean, they've gone up crazy amounts. Well, people are now unlocking this equity. Example here, um, someone buys a property for 100 grand in 17. Now it's worth 200. I can loan them 50% of what um, that property is today. And let's say that property's now up to 280,000. I can lend them 140,000, put that money back in their account. I can put them more money back in their account than they even put out to buy the thing, right? I don't have to say, oh, you got to have some skin in the game. No, your skin in the game is that property's got a lot of equity. So the strategy is a lot of people are using leverage on properties they already own to go buy something else. I'm just working on a deal right now where this couple has 3 condos free and clear, all great properties. I'm leveraging all of them in one loan, one single loan, 3 condos. I'm pushing a whole bunch of money back out into their account, and then they're going to go buy 2 more properties with that money. So extracting liquidity from existing properties is what a lot of people are doing. And this slide speaks to that, is to bundle several properties into one loan, as long as they're in the same state where you can record mortgages in the same jurisdiction. We can put one, two, three, four, five. We have loans with 10 properties on them. So there's really no limit to the amount of properties you can put onto a loan as long as they're in the same legal jurisdiction. And here's an example. We have a couple, 3 properties. Each have gone up in values dramatically. We bundle the properties together, and I do a cash out refinance of 50% on what their value is today. So think about that one. If you've owned properties for a few years and the equity's built up, unlock that equity. It's the way to do it, and put that money back in your account to go buy another one. Again, this is where we're talking about both the realtors and investors. There's probably some investors out there with locked up equity that they may want to tap in and go buy more, which we find a lot of investors are doing that. That's probably half our loans are people doing refis to buy more right now. Um, Here's another one, because people have been buying for cash, and sometimes that's the way to get the deal done. If you got the cash, cash is king. Sellers don't want to deal with financing offers of any kind. So if you have that cash offer, you're going to get the deal. Well, a lot of folks will pay cash and then come back to us right after closing, and then put a loan in place and put that 60% of purchase price back into their account. There's no seasoning required. You could close on a property today with your IRA, come to me tomorrow for a loan. We can fund that by the 1st of September and put a big chunk of your purchase price back into your account for other investments. And this is just again, a same example, that same thing. Um, they pay cash, they come back for a cash out refinance. We'll end up to 60% of what they just paid. And we can do that quickly. We're, we're the fastest, I think, in the industry, in that I turned around pre-qual letters in 2 hours. I can review properties. This is not exaggerating, that you could bring me a property yet this morning and I'll have a pre-qual letter for you this afternoon. So efficiency, speed, we're here for service. And we've been doing this for about 17 years in this field, in this industry, since 2008. And so we've got a good level of expertise. Nick and I are the main folks over here. I'm the primary lender. Nick is the president of the bank. That's my email address there, roger@myiralender.com. And you can contact us anytime. We have a website that's pretty powerful and has a great deal of information on there. We've got access to some archived webinars. We've got lots of good information. So our website is a great asset. So, um, so that said, let me kind of back out of this screen share for a minute, and I'm going to just take questions. If you folks have some questions and you want to pick my brain for a little bit.
Now, and there's some questions in the chat I can read off to you as well, and you can answer
Yeah,
if that works.
that works great.
And then that way you can focus on some of the answers here. And that being said, also please you can put in the chat or questions and any. I'm going to get to all of them here. We got plenty of time. And one other thing I was going to say is my team will put in here as well. Roger shared his information. My team will put it here in the chat. A link to schedule an appointment for those of you who are listening, who have a retirement account, who are interested in leveraging it and working with Roger, and or just opening up a self-directed IRA account. You can absolutely just go to our link, schedule an appointment, or if you just have questions on how does this work for me, schedule an appointment, and we'd love to answer any questions, or my email as well. I think it's in the chat, Greg Herleen at horizontrust.com. So you'll see that in the chat for those of you who need to schedule an appointment or want to learn more and go deeper into cryptocurrency or into lending or into whatever subject you want self-directing. But that being the case, Roger, there's some good questions here, and so let me just throw a few at you here. So let's start with the rate. What's the average rate for the loans that you're lending out? I think I saw one of your slides, but can you clarify what the rates are? And that's a common question in here.
Yeah, it is. Rates. We have four options. Every loan, as I mentioned, is a 30-year loan, but you have the option to fix your rate for 3 years, 5 years, 10 years, or 30-year fixed. So that said, my 3-year arm is the best rate. That's 7.75 today. My 5-year arm is 7.95. Most people are taking the 3 or 5 year arm because they feel like rates are probably going to be headed down in the future. And our loan rates are pegged to the 1-year treasury, which is typically follows off the pricing of the movements that the Federal Reserve does. So if the Fed is going to begin to lower rates maybe this fall and into next year, most investors are looking ahead and saying, I might take this loan today at 775, but I believe rates are going to be probably a 1% lower, or maybe 1.5 in the next couple of years. I'll do that 3-1 arm because when that loan resets in a couple of years, I might end up with a 6.5% rate. Now that's going to adjust annually, but that's each investor has their own appetite for risk. I don't know any investor who owns a rental house for 30 years. So So a lot of say people say, well, what's your rate? Oh, a fixed rate. Oh, I don't fixed rate. I said, are you going to own that house in your retirement account for 30 years? Well, no. Well, I said, well, why would you want to pay the high rate of a 30-year fix for 30 years when you may only own that house 5 to 7 years?
Yeah.
Most investors don't have a 30-year time horizon on their assets in the retirement account. Most are maybe a 5 to 7 year play. They're getting to another stage. They're going to liquidate this, liquidate that. So I tell people when you're taking out a loan, look at the loan term and base the rate on the length that you think you're going to have that asset. Oh, I'm only going to have that asset 5 years. Well, why would you take the 10-year arm or the 30-year fix? Because you're going to pay a lot more interest over the 5 years you're going to have the loan than if you took the lower rate to begin with. So just something to think about there for people. Variable rates got a bad rap in the early 2000s because they were very misused. And they were used with teaser rates to get people into homes that they probably couldn't afford.
Yep.
This is a different program. You folks are savvy investors. These are these rates are solid. They're portfolio rates. And you just think about the length you're going to have your asset and what you are looking for your return. And so that's my comment on rates. But 775 is my best.
Perfect. A couple other questions. What states do you loan in, and also what states and what's the minimum and maximum loan amount you guys
Good.
do?
Yeah, good question. We land in every single state except for the state of New York. And the only reason why New York is it's a function of their legal system. Their laws make it very difficult on lenders. Every other state in the country, we're happy to finance real estate in. The second part of your question, Greg, was
Minimum, maximum
minimum.
loan amount.
Yes,
Hmm.
minimum's 50,000. Maximum is 1 million, and that could be in one transaction or maybe multiples. I don't have any limit to the number of loans you can have with us, but I do have a limit of 1 million total relationship. So if you had five $200,000 loans with us, then that would be about the most I could handle. But $1 million
Okay.
or 50.
Okay.
Mhm.
Another question here, Jamila. Sorry if I didn't say that right. The cash from the equity in the property can only be used to buy new property. I'll answer this, and you can correct me if I'm wrong, Roger. If you're doing a loan and you cash out, meaning the money that you get a loan from Roger goes back into your IRA, you can use those funds for whatever you want. It doesn't have to be for a new property. It could be for a new business because this is cash you got back into your IRA, and now you can invest it where you'd like. Um, I'm a member of Horizon Trust, Steve, but my IRA Solo K is with another bank. Can First Western still work with me? So you bank, so you have a checkbook LLC, if I understand this correctly, right, Claudia? And when you read
Yeah, I
that
believe
question,
that's what
and
he's trying to say.
yeah, so if you have a bank account with someone else with your checkbook LLC, Roger, correct me if I'm wrong. I don't think that matters where their LLC is banking. That has nothing to do really with your lending, correct?
Absolutely correct. Yes, you can have your LLC account set up any bank in the country. We're just fine with that.
Yeah.
And
Yeah.
how would it work, Roger, if they have a checkbook LLC? Let's say they have $100,000 and they want the LLC to be the on title for the property. How would it work with a non-recourse lending
It's
situation?
it's very simple. When they go to sign the purchase agreement for that property, they write as purchaser the name of their LLC. Let's say that Claudia, you had your own IRA LLC. You would write it up as Claudia's LLC as the borrower, or whatever you want to name that, right? My
Yes.
Retirement Fund LLC. It doesn't matter. But the title then is in the name of the LLC. And then when you come to close, just like you would take your own personal checkbook maybe and okay, oh, I got to come up with 80,000 down at the closing table with personal money and then the bank makes up the difference, same thing. That IRA checkbook IRA would write that $80,000 check to the title company
Mhm.
right out of their bank account or wire the money however the title company wants to accept funds. And so it pays that down payment money out of the LLC bank account precisely.
Perfect. And another question that we have is the credit score taken into consideration? What's the lowest score you will accept?
Okay, so this is a good thing. You're not borrowing money.
Hmm.
Your IRA is, or your IRA LLC is the borrower. We don't care what your credit score is. Now, that said, we are going to pull your credit as the very last thing we do in underwriting because we want to know as a bank that you pay your bills on time because you're going to be directing your IRA to take actions, buy stuff, do different things, make payments if you got a loan. How do I know you're going to make payments on time? So we pull a credit history, Claudia, but we don't score
Hmm.
it. It's not scored. It's not 550, 750, 850. It's just, we want to just see that there's a good history of making payments. So it's not credit score related. And that, by the way, is really the only piece of personal credit information that this loan touches.
And what would be a bad credit history that you would stop? Like it's
Mm,
at the end of the underwriting. So what would be something that you'd be like, yeah,
okay.
we're not going to continue?
Well, let's say somebody filed bankruptcy last week, okay? And they went through a really pretty tough period and this and that. And I always ask people, know what's the reasons for these missed payments? And if the reason stacks up and makes sense, then I'm going to say that's fine. That's their personal life. It's off to the side of this deal. I can understand that. If what they're doing tells me that they just aren't responsible paying their obligations, then that could create a deal.
Hmm. That makes
It
sense.
happened, you know what? I bet in the 15, 18 years we've been doing these non-recourse loans, I might have had one or two that we've declined because of credit. Because you want to know something? Everybody in this world who's sitting here listening to your show and everything else probably has good credit. We all pay our bills. You know what I mean? It would be an aberration, honestly, for me to look at an investor who is trying to do this and they got bad credit. I just don't see it.
Yeah, I agree. I've seen this go. They focused, and that's it's non-recourse for a reason. They really focus on the collateral, the asset
Yeah.
itself, and sure they'll double check to make sure. It's kind of like the good guy clause. Okay, they're good. So even if you had and I'm speaking, I'm not speaking for Roger, but from my experience, if someone has a 600 credit score in a lot of cases, banks will be like, "Oh my gosh, 600 is not good enough." That's not their focus. That's not. They're not. You're not going to decline because you have a 600. So they really do focus on the asset, which I think is, and it's all. By the way, that's also why the rate is a little bit higher. And
Yeah.
and and so, but I like that. I'd rather pay a little bit extra in interest because now I'm not personally guaranteeing a loan. That feels good. And so
Yeah. What's
it's
that
a
worth?
risk reward. That's right. It's a
Yeah.
risk reward thing. So it makes sense to me. So lots of good questions coming in here. I don't know if you want to pepper them off
Yeah.
here. Go ahead, Claudia.
Yeah, so I have somebody asking, how do you wrap up a sale with mortgage for 30 years when the house sells after 5 to 7 years?
I don't know if I understand
I'm
that
not
exactly.
sure I'm following that question.
How do you
I think
wrap
they
up a
mean if they
sale with
have,
mortgage? If you pay out if the
Oh,
house sells in 5 to 7 years, it pays off the debt. It does not matter if there's it because the whole debt will be paid off. So
yeah.
Lana, I don't, and sorry if we're not understanding the question quite right, but it doesn't matter if it's a 5 year, or 30 year, or 15 year loan or terms. When you pay off when the home is sold, and that's 2 years or 5 years, the debt will be paid off in full. So the loan's over.
Yes, these loans are not assumable. So when you sell your property at the closing, the buyer, through either their cash or their financing, is going to pay off the debt that's on the house. So that's how it will go away. Yep.
Steve is asking, do you lend on vacant land and construction to build rental properties?
That's a,
Example, duplexes, etc.
yeah, I wish I did. And here's the thing. I did construction lending for a lot of my career, particularly in Arizona and high growth states. And construction lending is the highest risk lending for a lender because there's a lot of moving parts. There's different,
Yeah.
all kind of different things, right? So long story short, we don't make construction loans because everything is cross country. I don't have any customers hardly locally, right? All my customers are in California and Florida, everywhere, and I can't monitor a construction project down there in Jacksonville, Florida, or Charlotte. And so I don't do construction, but I do have a line on a company that can get some construction money. So the idea is if you can get your property built, then you can come back to me for the perm loan. Take out that construction loan and we'll stick a 30-year perm loan on there. So I have an avenue, I think, if your clients want to get in touch with me, post webinar, that I can provide a name and a phone number for and this is a reputable, this is not a fly-by-night, it's a reputable mortgage person that has been in this same business for 15, 20 years and has a conduit for some construction financing. So that said, we don't do construction lendings, we do perms. Other times, builders will actually carry. A lot of times, people are buying stuff, and the builder will carry the financing to the closing. So it's not always a deal breaker if you can't secure a construction loan during the part of that. Okay. I saw another question pop up on your screen. I'm going to steal this from you, Claudia, but someone asked about banking in an LLC. We can also bank your LLC account for checkbook control if you need that be. We have changed our core system here, and which is making us far more efficient to handle out-of-state accounts. So probably by September, we will be able to roll out a really efficient way for you folks with IRA LLCs and solo 401ks to have a banking relationship too. As mentioned earlier, you don't have to. You can have a checking account with your IRA anywhere in the country, and we'll be happy to work with you. But also, next month, we're going to be able to offer an IRA or solo K LLC efficient banking account. So I'm just putting that out there as a little word to check back with us in a little while because we're going to be able to handle those LLC accounts efficiently.
Right.
Sounds great. We have somebody asking, what kind of fees do you charge in addition to the interest rate?
Good idea. Good question. It looks like pretty much every mortgage loan you've probably ever done, we have a 1% origination fee. 1%. You borrow $100,000, we have a $1,000 origination fee. Our other two fees, we have a $400 processing and a 400 underwriting. That's it. So our fee is 1% plus 800 bucks. All of your other closing costs, by the way, you will have appraisals, title companies, if there's a survey required, all your normal closing costs that you'd have on anything you'd buy personally, you're going to have here in this sphere. There's really no discounts and there's also no extras. It's pretty much the same. It's just the IRA is paying the bill, but it's a 1% fee.
Mm-hmm. Perfect.
Lana, I see that as far as clarifying the question before, do you include total mortgage? So when you sell the property and there's a loan on there, whatever, if you've paid you will have paid your interest through that time period. So when the property sells, just the original, whatever the loan amount is at that time, because you're paying principal and interest, whatever the loan amount is at that time, that's what we paid off and you're done. You're not having to pay any additional interest for future months or years. You pay through the period of when the loan pays off, unless I'm misunderstanding that question again. So, put another way, if you have, say, land worth 100K and cash in your self-directed IRA worth, let's say, 200K, could you get a loan for approximately 300,000, which you could then, in theory, use for construction once it's in your self-directed IRA account? So if the land's worth 100 and the cash in your self-directed IRA is 200, could you get a loan for 300? With what I understood from Roger, they don't do construction loans, and so in this case, it would not qualify. What would qualify, and again, Roger, correct me if I'm wrong, as I heard you again today, is you would go out and you have this property, let's say this land worth $100,000, it's in your IRA. You could use your IRA, your cash in there to complete the project. Now it's rentable, right? So now let's say you have 300,000 into it and it's completed. Then you go to Roger and say, can I borrow $150,000? And if it's Roger, if let's say he's into it 300,000, this is, yeah, Carlton, but it's worth 350, no debt. Are you lending 50% of the value or 50% of what they're put into it?
I'm going to lend 50% of that fresh appraised value. So
Yeah,
now I'll lend 50% of 350,
yeah,
right? So you can that one would absolutely work because the loan amount's only, the loan amount's only going to end up being maybe 200 grand, which is the 200 grand that you put into it. Now you're going to get the
which
200
is
grand back. And
which
your
is kind of what
equity
you're
is the
looking for.
lot equity that you had to begin with in that thing.
That's right. So if it's worth 400,000, now you're getting a $200,000 loan. So the
Yeah.
other thing I'll add to this too is I've seen people do this, for construction reasons. There are private lenders or hard money lenders that will do non-recourse in this example that have more of this appetite. Now it's interest only, typically, right? It's a lot more expensive. It's probably like 14%, 12 plus 2, but you use that short-term money just for the construction and you complete the project. And once it's complete, then you go to Roger and you can go get a new loan and pay off that hard money or that private money. So that's another solution too. There's so many ways to kind of skin the cat on this. So
mhm.
We see that a lot, Greg, where someone will get a private money or a hard loan, maybe 10 to 12%, but they're only using that money for 90 to 180 days. It's not like you're paying that kind of rate for life. And it gets you
that's
where you're
right.
going. If that money helps, it's good debt. If good debt is what helps you get to where you're going. And so if that short term of high interest gets you to where you're going, and now you can flip that into a 7 3/4 loan with me, 30-year term, there you go.
Yeah, in my experience, for over a decade before I owned a trust company and doing real estate, I borrowed hard money, and I knew the rule was as long as I could pay off that hard money within 12 months, uh, almost always penciled. Once you start going in 2 to 3 years at 12 and 14% interest rates, it will just eat up your profits. And so, it's available, it's out there. And like Roger just said, in most cases, these small, let's say renovations or even construction project that's only 6 months, 14% for 6 months is really only seven. So you start doing that math, it's like, okay, it really only cost me $7,000 to $12,000 and it's expensive money, but if it's only $10,000 or $12,000. So, it's math. You need to make a decision kind of what's best for you. And let's look. I'm gonna kind of close up here. We got a few minutes left, and if there's one or two other questions, I want to let Roger share kind of some final thoughts as well. So before I go, Roger, any final kind of words that you've got that you want to share with our audience today?
I guess the biggest thing that I try to stress to people is this is not rocket science. This is very simple stuff. All you're doing is you're buying real estate, and many of you already own your personal residence. You've already bought real estate before, several times, probably, many of you folks. It's no different. You're just using a different bucket of money. That's all. And so it's not complicated. In fact, it's easier by far because I'm not asking you to provide me 3 years tax returns,
Bank
all your
statements
bills, bank statements, all this stuff. I don't care what your credit score is. I don't really care about you as a person. Yes, I do care about you, but I could care less of what you look at financially because you're not the borrower. And that's what makes this so compelling and so simple is a lot of the rules that apply to consumer loans, they don't apply to these. They're a business loan. We can close quick. Um, it's just common make sense stuff. So just because it's non-recourse and you haven't heard of it before, don't think it's complicated. It's really actually easier. And our staff is very good here. Our processes are good. We'll walk you through the process. We'll make your life easy and hold your hand the whole step of the way. So that's my thing is don't be fearful of this. And if you have any question, ping me up. Hit me up with an email. I'll send you my rates and terms I can push out. I have a simple little rate sheet and property eligibility form that I can push out to anybody who wants to get info from me. So if you have a specific property in mind, it'll take you about 1 minute to complete a little form, send it back. I'll run the numbers and get back to you shortly and we take it from there. So we're going to make this as easy as possible and as seamless as possible. And so will the folks over there at Horizon because we've done a lot of deals and the way they handle our documents and the way it works is pretty darn seamless. So I got to compliment you, Greg, and your staff because you're making these investors' lives, easy when they're doing these. And that's have it the easy button. Let's make it easy for you folks so you don't, it's not complicated. That's my biggest takeaway. This is not complicated. It's not rocket science.
This is great, Roger. Thanks. And that's kind of really what I wanted to say is, look, we don't at Horizon Trust Company, we're not fiduciaries. We don't get a fee. There's no compensation, commission that we get when you work with Roger. Our goal is to provide the best education and the best service. And our clients that use Roger and his bank are happy. And so we're proud to have him on as a host. We're proud to have him on our investment corner. And we're here to serve. Hey, thanks for watching this video. Hopefully you enjoyed it. There's lots more great content for you to learn and enjoy and apply to. And so anyways, click on the link below and listen to more videos or set an appointment with us. We look forward to hearing from you and also helping you.